Sell my insurance agency. How to sell an insurance agency. Unlock your agency's full potential. Before even contemplating listing your insurance agency, meticulous preparation is absolutely crucial. A well-prepared agency is significantly more attractive to buyers, ensuring you maximize your exit value. Start organizing now for the best possible outcome. Documenting your agency's operational processes is another vital step in this preparatory phase. Clearly outlining your client acquisition strategies, renewal procedures, and customer service protocols demonstrates efficiency and scalability to prospective acquirers. Understanding your agency's true market value requires thorough research into comparable sales and industry trends. Engaging a professional valuation expert can provide an unbiased assessment, ensuring you set a realistic and profitable asking price. Strengthening your customer retention strategies is paramount for a successful sale. High retention rates demonstrate a stable, loyal client base, which is a highly desirable asset for any acquiring entity. Focus on client satisfaction to boost your agency's appeal. Addressing any outstanding legal or compliance issues well in advance of a sale is non-negotiable. Resolving these matters proactively avoids potential deal roadblocks and reassurances buyers of your agency's clean operational history. Determining the optimal valuation for your insurance agency requires a deep dive into its financial performance and market standing. Consider key metrics such as annual revenue, profitability margins, commission structures, and the overall size and quality of your client book. Positioning your agency effectively within the market is essential for attracting the right buyers and commanding a premium price. Highlight your unique selling propositions and demonstrate a clear competitive advantage. Understanding different valuation methodologies, like multiples of revenue or earnings, is crucial. Each method offers a different perspective on your agency's worth, and the most appropriate one will depend on your specific business model and market conditions. The quality and consistency of your revenue streams significantly impact valuation. Buyers are particularly attracted to agencies with strong recurring revenue from established client relationships and long-term contracts. Showcasing your agency's growth trajectory and future potential is a powerful selling point. Provide evidence of recent growth, outline strategic plans for expansion, and identify untapped market opportunities. Buyers seek agencies with a promising outlook. Identifying the ideal buyer for your insurance agency is a critical step that goes beyond just the highest offer. Consider buyers whose strategic goals align with your agency's strengths and culture, ensuring a smooth transition for your staff and clients. Exploring different types of potential buyers, such as independent agencies looking to expand, larger brokerages seeking market share, or private equity firms, can significantly broaden your options. Each buyer type may have different motivations and offer unique advantages. Confidentiality is paramount throughout the buyer search process. Implementing strict non-disclosure agreements, NDAs, with all interested parties protects sensitive business information and prevents potential disruption to your current operations and client relationships. Leveraging the expertise of a seasoned M&A advisor or broker specializing in insurance agency sales can significantly streamline the buyer identification and vetting process. Their network and experience are invaluable in finding qualified and serious prospects. Thoroughly vetting potential buyers is essential to ensure they possess the financial capacity and operational expertise to successfully acquire and manage your agency. A buyer's ability to close and integrate your business smoothly is critical for a successful transaction. Approaching negotiations with a clear understanding of your agency's value and your bottom line is fundamental for a successful sale. Be prepared to articulate the rationale behind your asking price, backed by solid financial data and market comparables. Structuring the deal effectively can have a significant impact on your net proceeds and tax implications. Consider the mix of cash, seller financing, and earn-out provisions, and how each element aligns with your financial goals and risk tolerance. Due diligence is a critical phase where the buyer thoroughly examines your agency's financials, operations, and legal standing. Transparency and organized documentation during this stage build trust and facilitate a smoother closing process for both parties involved. The closing process involves the finalization of all legal documentation and the transfer of ownership. Ensure all terms and conditions agreed upon during negotiations are accurately reflected in the purchase agreement. Post-closing considerations, such as transition support, non-compete agreements, and any deferred payments, need to be clearly defined and understood by both parties. Proactive discussion of these details prevents future disputes and ensures a seamless handover. You can click the link below to learn more about how they do it.